Hi everyone, this is Nima. I got a really special guest today with me, Ryan, the mortgage guy. He's one of the best mortgage brokers I know in the business. He's again pretty young. He's doing amazing job with the mortgages.
Nima, how are you, buddy? Thanks for having me on, and I really appreciate it.
I appreciate it. So Ryan, right now, with this COVID-19 situation that we're facing, I know the biggest topic in mind right now is, how they can defer their mortgage. So the question I have is, first of all, how does it work? And which properties does it apply to? Does it apply to residential, or does it apply also to commercial, or also those people that have investment properties that are renting out residential properties?
Yeah, so a great question. Again, we are getting hundreds of phone calls on a daily basis with this inquiry, right? So there's really no definite answer, but obviously there's some advice that I could share, obviously in order to help our viewers kind of make a decision as far as what's best. Okay, so every lender has their own policy, and it's all case by case scenario, right? The number one thing that people need to keep in mind is that by deferring payments, it's not like you're never going to have to make those payments. It's not interest free, right? So again, it really comes down to your personal circumstances. So the number one thing that I could recommend is, I've had, tons of phone calls come in by clients saying, Ryan, I see the banks are deferring payments. I don't want to make my payments anymore. And I'm now asking these clients, are you still working? Yes, but I just don't want to make it. So personally, my recommendation is obviously if you're still working, if you could still make those payments, do make those payments. If you are in, dire hearts, you're out of work temporarily, you've lost your job, or whatever the case may be, this may be something that you want to inquire about, because obviously you don't want to miss mortgage payments. Okay. Number one is, again, people have been calling their lenders, as they should. They have been calling their mortgage brokers. But again, to the phone lines, again, you may have had clients even calling you saying, hey, we can't get through. I've had clients messaging me saying, Ryan, I've been on hold for 5 hours. I can't get through. So a lot of lenders have been adapting and now putting the information online and on their online portals. So if you bank with CIBC, RBC, TD, some of the model lines, MCAP, RMG, all these lenders have online portals that you could now log into. On that online portal, you're going to have the option to request to defer your payments. Okay. Now, when you defer your payments, essentially what's happening, again, different case scenarios, but that interest is just getting added on top of your principal. Okay. So look at it like an unsecured line of credit or a credit card. You spend $1,000. There's interest that's owed of, let's call it $100 at the end of the month. That $100 is now added to that $1,000. So now the following month, you're paying interest on $1,100.
Right.
That's now going to compound over time. Okay. So again, it's temporary relief.
Right. And which period does it get divided by? Is it the remainder of your mortgage term? So let's say you got a 5-year mortgage, you got 3 years of it left. Does it get divided over that 3 years once this whole situation is passed?
Yeah. So again, some lenders are simply just adding it to the principal balance. So when your term comes up, your term comes up, right? Now, mind you, your principal balance is going to be slightly higher.
Right. Yeah.
So obviously with that coming into effect, your amortization period, if you had 20 years left, it's no longer going to be 20 years anymore, right? It's going to be, 21 years, 22 years, right? I know, again, too, some lenders are now adding those interest payments over the course of the next 6 payments. That's what I've heard as well, which, again, can be, fairly substantial. And again, too, it's a gray area, right? No one really knows because we haven't been through this before.
Yeah, because if you get 6 payments, let's say $10,000 worth of interest, and then for your next 6 payments after this whole thing is done, 10,000 divided by 6, that's going to be substantial over your monthly payment. So you got to make sure you can cover that.
Most definitely. So my advice is obviously making sure before you actually, make that final decision to defer those payments, make sure that you know exactly how it's being calculated and what the repayment terms are going to be. Okay. Everyone needs to protect themselves here. And again, to the banks and institutions that we all work with, they're, working with every single one of us in order to help us out because everyone is going through this together. Right.
Okay. Yeah. So right now, in terms of interest rates, I know they dropped the interest rates drastically, 1.5% just within the March. So in terms of variable and fixed, what are the lenders going with these days?
Yeah, so rates have been all over the place, right? We're seeing in the news that the Bank of Canada is cutting interest rates. So again, too, I'm getting a lot of phone calls, and I mean a lot of phone calls, messages on Instagram in terms of, hey, Ryan, I want to lock in now. I want to refinance. But in all honesty, the opposite is happening, okay? So I'm going to try and explain it the fastest way possible, okay? So Bank of Canada cut interest rates, okay? The Bank of Canada rate has dropped. This is the rate that the banks borrow from the Bank of Canada, okay? Typically these rates, when the Bank of Canada drops their rates, it affects variable interest rate mortgages. It affects prime. So my advice, if you're in a variable right now, you're in the best possible scenario. Your rates have dropped drastically. I have clients that are in mortgage rates right now at 1.3%, 1.5%. We're never going to see these rates again. So if you're in a variable, you're in the perfect position. Okay. What banks have now done is for new mortgages, typically in the past, we have a variable rate. So we have prime with a discount. The banks now have gotten rid of that discount and in some cases added premiums. So now we have prime plus 0.1 or 0.2, where in the past we would always have prime minus 0.50, prime minus, even 1% in cases.
Yeah.
Okay. Fixed rates, on the other hand, completely different measure. Okay, so fixed rates are based off bond yields. Okay, fixed rates, because a lot has been happening in the bond market, investors have been taking their money out of stock markets and looking for safer investments. Fixed rates have now gone up. They're not at all-time lows anymore. So people need to keep in mind that when their variable rates lock or when their variable rates drop, and they now hear that that rates are at all-time lows and they want to lock in.
Right.
They're not locking in at that current variable rate that they have at 1.5 or 1.8%. They're locking in at current fixed rates, where in some instances, they range anywhere from 2.8, to 3.2%.
Right. Okay. Nice. So if someone was to come to you right now, getting a brand new mortgage, not talking about a refinance, would you suggest getting into a variable or a fixed in this situation right now?
Variable. Okay. Number one reason for a variable rate, regardless of where rates are, variable rates provide flexibility.
Okay.
Right. So number one, you could break your variable rate mortgage at any point in time and only have to pay 3 months interest. So why would you want to break it? Let's say today you get a variable interest rate at prime, okay, which is 2.45%. Okay. Well, in a year's time, if there's another lender offering prime minus 1%, we want the ability to be able to break that mortgage, pay 3 months interest, and go over to that new lender at that deeper discount. Yes, it'll be a 3 months interest penalty, but the savings will make up for it in the long run.
Wow. Okay. Well, that's good. So keeping that in mind right now, what's your projection going towards the end of 2020? What the interest rates are going to go for, let's say a year and a half from now? Just,
Yeah. So when we look at that, we take a look at, again, the prime rates, usually the governments use this as a tool, right? It's used to stimulate the economy. Okay. So when the economy is doing poorly, like it is right now, a lot of uncertainty, we don't know what's happening, right? Variable rates go down. The reason why they go down is to stimulate the economy, right? They want to incentivize people to, call people like me to borrow more money, right? Or call, someone like yourself to buy an investment property because money's cheap, right? So by rates going low, again, people want to spend money, they want to borrow more, okay? Now, obviously, when the economy heatens up, it's doing well, right? The government wants to slow things down, okay? So they're going to start increasing interest rates. So now people are going to start thinking twice, hey, maybe I don't want to buy that car, or maybe I don't want to take that money off that unsecured line of credit anymore because the rates are substantially higher, okay? So my forecast is, we're not going to get out of this overnight, right? There's businesses that, have been hurt, significantly with this, our restaurant owners, no business coming in, people being laid off. I don't think even, let's just say next week, they say that COVID is gone. It's not going to be a month, 2 months, 3 months, 6 months, not even a year, my personal opinion, for this to get better. So I personally see that we're going to see, record low interest rates, for the foreseeable future. I would say, my personal opinion, Ryan, the mortgage guy's opinion, minimum of 2 years.
No, I think you're bang on, and that's my opinion as well. I think for it to go back to where it was even a month ago, it's going to take easily a year, because coming out of this, we're going to need those low interest rates to get back to where we were. Thanks a lot for jumping on the call. I appreciate it. I'm going to put your contact information for people. If anyone has any question, that's the guy to ask. Don't ask me. I don't know mortgages. He's the guy to make the comments. So yeah, I appreciate it. Thank you.
Awesome, Nima. Thank you so much. Always a pleasure.